Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 27th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see here 2 days now of sideways price action, very similar to what we discussed heading into Wednesday's FOMC statement and Fed interest rate decision. Right now, holding at the highs here. One of the things we talked about is heading into that event, you tend to see a couple of narrow days here. After the event, lately at least, we've seen a couple of days of pullback followed by a continuation to new highs. So that's very similar to what we could expect to occur here this time around. Tomorrow we'll get the FOMC key level. Perhaps we pull back early in August, and we'll see how deep that pullback develops, and then from there we can see likely another continuation higher unless certain market structure levels are violated, which haven't been broken just yet. This market's been very strong. The last time we had an FOMC key level here in June, went offered first, then bid. The retest was also off bid here as this thing continues to new highs. Very, very strong market here, but expecting further range-bound action with an upward bias heading into tomorrow's session. Here's a look here at the NQ now. The NQ also narrow range day, sideways, 41% of ADR heading into the RTH Open. 2-day narrow range, very narrow as well, sitting on highs. It looks very similar to what we've seen here out of the ES. Now this one has had pullbacks as well. So here's the January FOMC right there. You see a pullback and go to new highs. The one over here that was in March, that was more of a shallow pullback here and then continuation. April, bigger pullback before it continued to new highs. And then right here in June, it was a small wiggle before it continued to new highs. So again, this market remains very strong. Any pullback still considered likely a buying opportunity until proven otherwise. We'll see this market likely continue to be range bound here ahead of Wednesday's statement. Here's a look lastly or next here at crude oil. You'll see crude oil right now up just slightly on the day. The previous session a pullback with a strong low. That low has continued to hold 41.75 today, holding on an intraday basis. At the moment we are sitting near the highs of the recent rally after the pop, and we're sitting right at that 72 key level. 72 is a short-term level here. 70, very important lower level. In staying above 70 here, the suggestion here is likely an attempt to continue back up toward the upper end of this key range. Any failure to hold 70 could open up a return back down. So right now, looking at sideways to up, heading into Wednesday's market. Taking a look now at gold futures. Here's a look at gold. 1790 continues to be the level that we're continuing to watch here. 1790 is a market structure level, very, very important. And so far, it's doing everything it needs to do to hold that level, even in the face of a failed new high in the previous session and a close below the midpoint. That would tend to be very, very bearish. But in this market right now, we're mostly range bound here, and we've seen a very strong rejection develop here on the low this morning. Rounded bottom that has developed over the last day plus, and this is a very strong move right now. So again, 1790 coming in as support yet again. We're seeing a failed new low this way, which could push price back toward the top end of the 3-4 day narrow range. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.